Financial argument. Follow us on YouTube.
Let's get right into the economic collapse financial news. Now, we've been looking at economic indicators, not just here in the US, but in Canada, Australia, UK, throughout Europe, and we are noticing that these economic indicators, they are pointing downward. We're in a downward trend at this point, and it's accelerating. It's not improving the other way, and I believe we're all starting to realize this. Yes, there's certain people out there that still are holding on to the corporate media, the U.S. government, the president, who's saying that the economy is doing fine. But the facts are the facts are the facts. And people can come out and say, yes, the economy's fine, but you better have a lot of facts behind it. And even the facts from the government aren't panning out anymore, because we can go through those facts and we can see where things have been manipulated. And this is the problem that everyone is having right now. And a lot of the financial pundits, a lot of investors, they're starting to realize that things are rapidly falling apart. And they know this. And this is why we're starting to see gold move up at this point. Now, if we look at retail sales, we're starting to see retail, they're starting to decline in many areas. Now, in the U.S., retail has been declining for quite a while. We see it in Canada. We see it in Australia. We're seeing it in Switzerland, where retail sales have declined by 1.3% in March. And, again, they were expecting it to be a lot better, and of course it wasn't. And we're seeing in the EU the same thing happening. Now, of course, the corporate media, the governments, they all like to spin it that everything is fine, that everything is going well. They did this back in 2013. I mentioned this many, many times, where they try to convince us that they're in this incredible recovery, which never appeared, because here we are in 2016. And what we're seeing right now is that the Eurozone factory growth, it has weakened in April. And Europe, they're on the verge of collapse right now. And what we're seeing is that there's a decline in productivity. And this is one of the problems for the EU. Labor productivity in the EU has slowed since the global financial crisis. And there is little probability that the five largest EU economies will recover back to the way they were. It's completely impossible. We see Spain, Italy, their productivity has stagnated since 2014. And one of the biggest problems for the EU is, of course, the migrant crisis. And we can see that this crisis throughout the EU, we haven't seen anything like this since World War II. More than 1 million refugees arrived in Europe, and the EU is still struggling to solve the problem in the least painful way possible at this point. But from everything that we're looking at, the debt is too high, the economies are going nowhere, people are being unemployed, they're manipulating the statistical numbers just like the US, they have negative interest rates, they're buying corporate debt, and they're continuing with these policies where it is going absolutely nowhere. Here in the United States, we see Chevron Corp. They're laying off 1,000 people. And U.S. home ownership right now, it is at its lowest level since the Johnson administration. Now, of course, as we know, the housing market is one gigantic bubble. And the way they created the bubble is they kept houses off the market. So there was no inventory. This is why you keep hearing people, well, there's no inventory and the prices are going up and people have nothing to buy. They did this on purpose. Because first of all, there's not enough people out there to purchase all these homes. Think about all the toxic real estate that the Fed has purchased. Think about all the foreclosures that the banks have on their books that they're not releasing into the public. Because if they do, housing prices will not go up. They can't have the bubble effect. And what we're seeing right now is the everyday American, they can't afford these homes. And the home ownership rate shows us exactly what's going on here, is that the everyday American is not purchasing. It is investment companies, foreign investors, taking the free money and using it. And what we're seeing right now is that the housing market, it's getting ready to implode. They cannot keep this up. And the next generation, they're living with their parents. They can't even find the jobs to save the money to purchase a house. And what we're seeing right now, that this is going to be a full-on disaster. You think 2008 housing crisis was a disaster? This is going to be 10 times worse. Add in everything else, this whole thing is going to implode. Now, manufacturing, it has not gotten better at all. Market's final manufacturing PMI printed at 50.8. Its lowest since September of 2009. That was the year that we were in the height of the Great Recession. New orders weakened, job creation tumbled, and the April's PMI data suggests there is no end in sight to the current downturn in manufacturing activity. So when people say, well, manufacturing is going to be bouncing back, no, it is not. Everything is connected. If the people aren't working, they don't have the high-paying jobs, and we continually see more and more layoffs, guess what? You can manipulate the statistical numbers all you want and tell us there's 2% unemployment rate. It's not going to make a difference. Because if the people aren't working and have the high-paying jobs, they're not making the money to go out and purchase in retail. This is why we see retail contracting. This is why we see manufacturing contracting. This is why we see it all imploding. Now, Schwab, they are doing something very interesting. They started informing their clients that between June and October of 2016, they're going to be updating the cash feature on the accounts from the current retail prime or municipal money market fund sweep to the Schwab government money fund. Well, what does that mean? They're going to invest 99.5% of its total assets in cash and U.S. government securities, which is treasuries. And at least 80% of the fund's net assets will be invested all in treasuries. So in other words, Schwab is telegraphing that brokerages have begun permanently unwinding hundreds of billions, if not trillions, in money market funds and rotating it almost entirely into government securities. Because more and more countries are selling their treasuries. Someone's got to take up the slack. Now, the Fed could do it, but it looks like they're trying to force this on the people's investments, retirement funds like the My IRA, which, of course, Obama put out there, and that would be made up of treasuries. And it looks like they're doing the switch at this point, because as we can see, more and more countries are unloading. It looks like Saudi Arabia wanted to unload some of their assets. China is unloading. Many other countries are unloading. And we see at this point that as this picks up, they need a place to put them. They need buyers. And it looks like all of these funds are going to be the buyers. And they're going to be worthless as time goes on. Now, Puerto Rico, it looks like they are defaulting. And we see that Puerto Rico governor says won't pay debt tomorrow. And right now, they're looking for some type of bailout. And we see Jack Lew, he sent a letter to Congress warning that if Puerto Rico, is not fixed in an orderly manner, the nation will face cascading defaults, basically saying we're doomed if this doesn't happen. Now, they said this back in 2008, if you all remember, when they were in front of Congress asking for bailouts for all the corporations, and now we have Puerto Rico defaulting. And here we are once again. Now, we're all doomed no matter what. And I don't mean to sound doom and gloom, but what we've been tracking and what we've been watching and looking at is telling us that this economy, it doesn't matter at this point if we bail out Puerto Rico or not, because the debt is unsustainable. And if it's not Puerto Rico, it's going to be something else that brings down the entire economy. what they're doing is they're plugging the holes of the dam, each leak, with tape, spit, and gum. And each time, the water is breaking through. And eventually, you know what happens. The dam comes down. They cannot maintain this. And this is why they're warning right now that the 5 economies, including China, Japan, Germany, South Korea, and Taiwan, do not devalue your currency, because it looks like the U.S. is going to be doing that at this point to try to prop up the system once again. And as they continually devalue, what happens to gold? Well, that's going to continually rise. And this is something to watch. And it's going to make it more and more difficult for them to suppress gold as we go forward. Now, I thought they were going to suppress it by today. We saw gold went up a little bit. It popped over 1,300 but came back down. They might do it Tuesday or Wednesday. And we have to see how big this flash crash is going to be, because this is a signal letting us know as gold continually rises, a lot of people are going to say, something's going on here. I better start getting into hard assets. We know there's a lot of sellers in the stock market, and this is something to watch as we go forward, because when we see gold moving up $100, $150, $200, well, this is the end game, people. This is where you need to start taking cover. And the dollar is tanking right now. From a high around 100 in December, the dollar index, which is measured against different foreign currencies, is down about 8%. And it is declining, and it is accelerating. But a weak dollar, by definition, means a strong euro and yen. And those economies are totally unprepared for their exports to become pricier and therefore harder to move. Now, will they sit around and just say, okay, you devalue the dollar and we'll just sit back and our economies will implode? No, what they're going to do is they're going to devalue their currency. This is the currency war, and it's gearing up, it's accelerating, and hold on to your seats, because we see trade wars already, we see the currency wars picking up, we see gold moving up to the upside. Everything is starting at this point. Now, very interestingly, we know that Saudi Arabia has been pumping a lot of oil, putting pressure on Russia, and we know the United States has talked to Saudi Arabia into doing this. Saudi Arabia is hurting right now. They want to sell some of their assets. They're looking for different ways to reignite their economy. And the U.S. says, no, you will not be doing any of this. And this is why they were threatening them with those 28 pages. But we see all of this oil is being pumped, and we're seeing 83 supertankers carrying about 166 million barrels of oil. They're headed to China. And they've been stockpiling oil, just like they've been stockpiling gold. Now, they have the highest stockpiling rate since 2014. And this started the beginning of the year. So they're building huge underground storage tanks to hold all this excess oil. So a couple things are happening right now. First, the Chinese, they realize that oil is going to be going back up in price, just like gold. So they're trying to get as much as they possibly can. And they're very worried about a disruption due to geopolitical reasons, which might propel oil prices higher, and it might be hard to find oil at this point in time. And we can see at this point that they're doing this because we know what's coming. The collapse of the system, the U.S. continually provoking war, and Russia, China, and the other BRIC nations, they realize what's going on at this point. And people say, well, maybe the central bank, they'll do what they did before and the economy will be pumped up once again. Well, yes. Are they going to create currency out of thin air? Yes, most likely. But they're just going to add on to the debt. Will they try to lower interest rates? Yes, most likely. But that's not going to help the situation. I mean, look, Europe, Japan, they're in negative already. It's not going to help. It'll inflate the bubbles a little bit, but people are going to lose confidence. And that's what we're seeing right now. Can they manipulate statistical numbers? Of course they can. But again, if they manipulate an unemployment and they tell you it's 1.5% right now, does it really matter if everyone's out of work? They can show all the numbers they want. It'll make no difference at that point. And at this point, everyone should be purchasing gold and silver. because there's going to be a time, I think, in the next couple of months that it's going to be impossible to find or get, or the prices are going to be too high and it's going to push people right out of the market. I think people need to get their food right now. Water, batteries, toiletries. Because at this point, things are rapidly falling apart. And if you haven't started, I would start. Don't make yourself nervous. Just go out and start purchasing the goods. Just do it every week. Set a little aside, and that's all you have to do. Just keep doing it. Don't think about it. Just do it. If you haven't started and you want to get a jump on it, you can go to lifelinelines.com. They have water filtration systems. They have emergency foods. You can customize your order, and they'll send it right to you. But no matter which way you do this, we're going to see the economy implode and accelerate as we move forward. And it's going to get worse and worse as we map this. It's not going to improve. It's not going to get any better. Because what we've been seeing since the beginning, we've seen some pop-ups, but every time we see a pop-up, it declines even further in the downward trend. And we're starting to see this now. And we're seeing defaults. We're seeing bail-ins in different countries. We're talking about bailouts. And we see that things are rapidly imploding on itself. And there'll become a point where the U.S. government central bankers, they will not be able to stop it. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.